Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Over the past week, the Australian dollar has held to an extensive bearish outlook due to the break of the head and shoulders pattern. We got a shoulder, we got a head, and we got a shoulder. Now from that you can see there's a support which is known as a neckline. From the head to the neckline we get a measured move from the break of the neckline, which gave it to 70.20. Now overnight we got down to the lows around 70.10 and reached this objective, and now presently in a slight rebound. It is assessed that we could see a move up towards 70.70 or even extending up towards 71.25 to 35. I'm not too sure on the second part of the move, but at the moment we can see that we are testing 70.60 and there is still room for another 20 points upside due to the fact that when we look at the hourly pattern, that the market is still, as you can see here, showing a somewhat positive pattern, but the bears are still around and the bears are still expected to take the challenge back down. If we get a close under 70.10, this would expose the region next at 69 cents. That is my preferred target. However, I would be a little bit cautious to that call while this rebound is in motion. Well, as you can see, the market crushed the level this week of 117.50 and now poses a further threat to the downside as the US dollar strengthens. It is viewed that this could be the first week of a negative euro since May. And also with this pattern breaking down, along with 117.50, an ADX trending to the bear case still puts further risk for a target of 116.10 to 115.30. The dotty end, well, as you can see here, history repeats itself. The rebound of 104 back here in July, you can see here, reached the target to around 106. Now, we had a bullish outside range day and a bullish outside range day just recently off the 104 level. I do anticipate that if we look at this downtrend in the short term, is that the resistance is at 105.90 figure. And no doubt if we get a challenge there, could see a rejection and look back towards 104. But keep an eye on this MACD, because if it breaks over the zero axis, could marry up and therefore see a break which could therefore see a break above 105.90 figure. But at the moment, I still feel that this trend is quite in the terms of firm. The pound is still trying to recover over the last day and a half, even though we have had the break of 127.5, and with the downtrend coming in, and also a bit of an ADX trend there as well, it does put concern that we could eventually see a fall towards the region of 125.5 and reassess. That is, with the pound slightly recovering, we can see that the sterling yen is attempting to recover as well and still lacks momentum from a technical point. We're still under the midway point on the RSI and we're still holding to a negative case to the MACD. And the trend is just there to the bear case for this ADX. Therefore, could see a rejection towards the top side of that range around 135 and still look to the downside target, which is seen at 131.80. Well, this week, the gold picture has been bearish and it's taken out levels of 1,880, 1,860, and got to a low of 1,848 overnight. There is still room to test the level of 1,820.25. It's where the base or the potential bull camp is holding and maybe see a recovery from there. But for now, we should not discount further down tests at present. Wrapping up with oil, well, the market's recaptured its bullish charm as it gets above 40 and now trades at 40.5. I still feel in terms of the technical aspect that we are bullish and looking up towards 41 or even up to the recently contested highs of $43.80 a barrel. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report. I hope you enjoyed a great start to the day and to this wonderful weekend.